Boom. April Fool's Day. Happy Monday. Happy Easter. We woke up with some wild data today. I mean, just absolutely insane. Ahead of the jobs reports, you can see here we broke beneath the support for the 50-day, the 100-day, and the 200-day moving average. Looks like we're bouncing back, but there's really no support here all the way down, which means rates can get real rocky. Yeah, alert to lock this morning, 32 basis points. We started the day at 9 basis points down, 32 basis points down, which that's that hurts. That hurts every bit of my soul. So gotta watch this. If you have an escrow with me, I'm probably gonna lock right away. I got two new openings this morning. So if we're opening, we're locking. Here's where rates are sitting according to Mortgage News Daily. This is conventional, sitting about 7. I priced out my loans. Mines were sitting at about 7,125 to 7,375 if there was any money to be made on it. So I think they're a little low on this. And jumbo sent about 735. I haven't done a jumbo loan in forever. Those were this just it's too crazy right now. VAFHA, I was sitting about 6.25 still. Really 6.5, 6.625 was a good spread. The thing with Mortgage News Daily is they don't tell you how many points. I calculated 600,000. You can see here the payments without. This is just principal and interest. Doesn't include taxes and insurance. So if you want a rate sheet with the exact payment, shoot me a message. I got my IG right underneath me, and I can price out anything for you. What I thought was a cool lesson, and for all you realtors and loan officers, this is a script you're going to want to take because just the marketplace is so harsh. So this is Fred's economic data, and man, I wish I knew what Fred stood for. No, I'm just kidding. But you can see here this follows average sales price of houses sold for the United States from when they started tracking it, right? So look at this. And so what you can see here, if we look at 1965 all the way to today, you can just look at this growth, kind of steady, kind of steady, kind of steady, kind of steady, kind of steady. And then all of a sudden, right, in 2020, rates crash, and then poof, you have this huge growth. This is COVID right here, all the way through 2022. And then you start to see this dip, pricings dip in 2023, rates go up, and then you're starting to see a dip in 2024. Do I think prices continue to drop? Depends if the Feds decide to lower rates or not. If the Feds hold rates at this rate, I think you're going to have some forced sales. But where have the dips been? Well, the dip happened, right? 2007 peaks at 322, and then it dips to 257. So, a little under 100 grand. And then look at this rebound, kind of stay steady. And then all of a sudden, 2011 is right about when Dodd-Frank comes out. And then boof, you just have this huge rise in prices, right? Rates between here and here sat at about 3 to 5%. That was a fluctuation. 3 to 5% is a very healthy place for mortgage rates. Rates go down to 2%, and then it gets chaotic. And then they're printing money, everyone's living life. Oh my God, things are so great. And then, oh shit. And then, oh shit. If this continues right here, rates go any higher, you got to prep. You got to start doing things to prep yourselves, because if the Feds are stating that the economy's strong, what's crazy is the stock market is booming. And the reason why the stock market is booming, and I've sat on this all weekend, I thought about this all weekend. So much money got pumped into the economy, so much money that now exists that it created a new baseline for like the S&P and the Dow, and all these different stock prices are inflated. Well, because we got all this money that came in 2020, it was artificially inflated, and all the money had to go somewhere. And guess what? It didn't stay with the people who got it. The guys at the top, the guys at the top got the money. These people opened up Robinhood accounts and blah blah blah. They did all these Bitcoin. All of a sudden, went on a run. Then they pulled the rug from underneath all you guys. So all this money comes into the economy. They put it in the stock market. It's artificially inflated. Unless the jobs report, you have two jobs reports coming out this week. You have one on Tuesday, one on Wednesday. Really, Wednesday, the ADP report is key with rates sitting, with the unemployment rate sitting at about 3.9. We see it go up. California just announced unemployment's hitting 5%. I think it was 5.3% last week. So if unemployment really starts to climb up, you're going to see, you guys are going to see that the feds are going to be forced to reduce rates. They're definitely not cutting rates May 1st. Not with what we're seeing. They're probably cutting rates in June. And the reality, we hope, but we don't know yet. But if you're trying to buy a house right now, it's probably, you got about 3 to 6 months before they really cut rates. Once we see rates go into the fives, it's going to be a frenzy. But here you go. Once again, conventional low sevens. That if you're quoting out low sevens, FHA, VA sitting mid sixes. And if you want exact pricing scenarios, shoot me a DM. My IG's right below, and get you all hooked up. Have an amazing April 1st. Talk to you guys later.